Statoil has reported an unexpected loss. This was for the fourth quarter numbers, deepening write-downs on the US shale assets. The adjusted net loss, excluding financial and other items, was 40 million, compared with a profit of 185 million just a year ago. We have Eldar Saetre, the CEO. Happy anniversary, first of all. 2 years in the seat. I remember your second day. You've done a lot, but here we are. We're in the fourth quarter. $2.3 billion of a write-down. What catches my eye is that this is, in part, tied to the long-term assumption on prices. This concerns me the most.
Well, our results is obviously impacted by the still very low commodity environment. Statoil is predominantly an oil and gas producing company, so oil and gas prices at any point in time is very important for us. And still, even this quarter, we had below $50 per barrel. In terms of impairments, we had impairments this quarter of $2.3 billion net. And the main reason for that is related to the fact that we have adjusted downwards our long-term price assumptions, mainly for oil. So now we are looking at an oil price in 2020 at $75 per barrel. And we're also taking down the oil price beyond 2020. So that obviously has an impact on our balance sheet, both on the Norwegian portfolio and on our international portfolio.
So when investors see impairments, they sometimes want to know whether this is the end of the impairment story, whether there's more to come. From what you've just said, it depends where the oil price goes and your assumptions of it.
Well, we do a lot of hard work to improve our operations and increase our efficiency and improve the value of our assets. So that is supporting this. And then obviously our view at any point in time on both the short-term and the long-term commodity has an important saying in terms of the valuation of our assets.
Why have you changed your view on oil prices?
Well, this is based mainly on our assumption now. And we have seen this over some time, that cost is coming down in the industry. Is this going to stick? Is it going to, be sustainable? And we think that a big chunk of it is actually possible to sustain. That means that the long-term cost assumptions in the industry is coming down. And the implication of that on a long-term perspective is also that we see a lower oil price environment. It's very consistent.
Look, one of the hallmarks of your tenure this 2 years has been a man that's been absolutely focused on bringing down capital expenditure. You've done so down to 10 bits. You've slashed it by nearly 50%. I see the number at $11 billion. Are we at the bottom of your capex? Are we at the trough? Can we expect you to inch higher on these capital expenditure numbers?
Well, for last year, we guided at the capex number of 13 billion. We came in at 10 billion. This year, we increased it slightly. We are investing in high-quality projects. We have a portfolio now which has a break-even price of $27 per barrel. We would like to invest in that portfolio, so we are slightly increasing our capex number to 11 billion. And we'll invest in these projects also going forward, and we will also continue to do exploration at approximately the same level, $1.5 billion that we did last year.
You've been taking costs out of the business, you've been cutting back on capex, you're dealing with a lower oil price, and yet you're still distributing money to shareholders. Talk us through the thought process, Eldar, at the moment, about how much investors just care about the dividend return and how much that is almost sacred. You can't touch it.
Well, first of all, what is important to support the dividend is that we actually can generate cash to support it. Then we need to invest in project, and we need to generate cash every quarter. This quarter, fourth quarter last year, we actually had a positive cash flow, almost 1 billion positive cash flow after tax, after paying dividend, and after investments.
So you're paying the dividend out of cash, you're not having to borrow?
So we in the fourth quarter, on the year as a whole, we had to borrow. On the fourth quarter, we supported our dividend and capital distribution by cash from our operations net after dividend.
Will that be the case for this year going forward?
So for this year, we see that we will be able to be what we call cash flow neutral at around $50 per barrel. And our dividend policy is very important for us. We are committed to the dividend, and we have announced today that we will pay the same dividend level for the fourth quarter as we have done over the last couple of quarters, and that you should expect the same dividend level over the next 3 quarters.